Good afternoon, everybody, and welcome. I'm Lori Burns, the founder and CEO of RUBYFIVE. For those of you that might not know RUBYFIVE, we empower businesses to pay their suppliers instantly with real-time payments. We're going to touch on that a little bit today, but we're really going to focus on going into a deep dive into real-time payments. How do they work? What are the characteristics, the adoption rates, and the benefits? We are proud to offer this webinar as a part one in a three-part series called The Payment Shift. It's a series for modern CFOs that are looking to learn more about payments and add innovation and automation into their workflows. Today's an educational primer with a special guest, and the next episodes will dive deeper into the value with several CFOs and controllers. So I'm really excited to kick off this series today with Peter Davey. Welcome, Peter. Peter and I have known each other for a while and through different venues in our careers. We are both passionate payment nerds who share a vision for innovation in the payment space and bringing value to businesses. Peter's definitely a well-known and respected thought leader in the space. He's held pivotal roles at places like the Clearing House and Capital One. And he recently co-founded Rebuilt Financial Technologies, which is a collaborative platform for community banks and credit unions to scale embedded banking services. He was actually instrumental in designing and launching the Clearing House's real-time payments network. And he's been widely recognized for driving systemic change in the industry. He holds multiple patents in payments space, and he frequently speaks at many of the top conferences in the industry. Today, congratulations to Peter. He is the founder of PaymentsJedi. It's an advisory firm where he offers strategic guidance to fintechs and financial institutions navigating complex payment ecosystems. So let's dive in. We're excited to have you here today, Peter.
Thanks, Lori.
So we're going to start with looking at the landscape of the payment space and specifically real-time payments. So we know real-time payments aren't new. Actually, globally, other countries like the UK have something called faster payments, and India has UPI, and they've really led the charge. In the US, however, progress has been slower due to our more complex banking system. So Peter, having had a seat at the table kind of in the US as all this was being built, we'd love to hear from you about your journey and where you think we are with these new payment rails.
Yeah, I think one of the benefits and detriments to the US is that we actually have had a very mature, well-functioning payment system for a long time in the ACH network. A lot of other countries didn't enjoy some of the same capabilities that we have had for a long time in electronification of payments. So that's why we came a little bit later to the game, which actually isn't the worst thing in the world. When you think about it, having multiple countries go ahead of you and setting a standard for the way in which banks can communicate with each other, not just nationally, but internationally, I think is a very important thing to understand. And if you think about the timeline for real-time payments in the US, it's been a long time coming. Actually, it was part of a clearinghouse initiative that started off in 2011, looking at whether or not we needed a new payment system in the US. And that was actually at the request of the top 25 CEOs in the US for the financial institutions. Ultimately, we came out with the answer around 2013 that you really did need something new. At the same time, the Fed entered the market with their faster payments task force and ultimately said, hey, we need to think about how we're looking at real-time payments or instant payments in the US. And then in about 2014, the Clearinghouse announced at the end of the Federal Reserve task force work group that they were going to launch a real-time payment system. That was November 2014. And then by November 2017, we had our first real-time payment system in the US that was built underneath the guardrails that were set forth by the Faster Payments Task Force led by the Federal Reserve. Enter the Federal Reserve a few more years, 2019, they actually talked about launching their own network. They felt that they needed one to create some parity in the US. For anybody who knows anything about the US payment system, we don't just like one of everything, we like two of everything. So in doing that and giving folks choice, we ultimately had FedNow launch in 2023 as a competing payment system to the RTP system that the clearinghouse launched in 2017. Um, just a little bit of a backstory on that real quick. Some may ask, well, why do we need two? The rationale is we have 9,000 some odd financial institutions in the US. It would be really hard for a single service agent to service all those financial institutions and do it extremely well. While I think you could do it on a single set of technologies, the manpower to be able to onboard that many financial institutions is difficult. Secondarily, though, there are a lot of financial institutions that don't trust the larger financial institutions. So you end up in a space where, there's a little bit of freeze in the market because some of those financial institutions didn't feel comfortable with TCH. Therefore, the Fed coming in legitimized what TCH was doing, and the fact that TCH had already launched their network, it actually legitimized what the Fed was doing. So in reality, both actually from a yin and a yang perspective are actually going to lead to greater market adoption than just one would have or the other. One thing to note as we think about what's happened overseas versus what's happened in the US, most of the successful payment systems across the world that are running instant payments like UPIs, as you mentioned, or faster payments, all of these came about through some type of government mandate. We can't do government mandates in that way in the US based on the role of the Federal Reserve and the charters that they have. So we really are a free market economy here. And when we think about the adoption of it, it's really not, the network wasn't based on just having a new payment system. It was based on the fact that we needed new capabilities for a 21st century. And I think as we go through the rest of this particular conversation, Laura, I want people to focus in on the attributes of the ecosystem as opposed to just the money moving faster.
Absolutely. I think that's the key, right? What are other countries seeing that we need to catch up to? And so we do have two systems, and they're kind of challenging each other and bringing a better solution, which is great. Now, there are some steps that banks need to take to kind of implement this and get ready. Where do you think we are on that journey? Some say that that's kind of why we haven't seen a lot of use cases out in the business consumer world yet. It's like we've got to wait for the banks to get ready. So where do you think we are now, like from that standpoint?
Oh, I'm gonna put it this way real quick, which is think about the fact that we all had checks right before ACH came out. We didn't wait for ACH to be completely adopted before people started finding use cases for it, and we didn't ever get rid of the check side of it, right? Same with wires, et cetera. So as we think about this, there are use cases that can happen, and I know a lot of people talk about ubiquity and reach. It's not as important given the number of institutions that can already receive. It's really about finding the use cases and the partners that can leverage it. And you're still going to have a mixed media of payments. So you're still going to send ACH transactions where you can. You're still going to send wire transactions where you can. Hopefully, you're not sending checks. We want to try to get rid of checks. I've been spending my entire career trying to get rid of checks. Hopefully, at some point, I'll be successful. But I think as we're looking at how you actually look at RTP or FedNow, or what we call instant payments in general, compared to ACH and wire, it's complementary and additive. And when you start to leverage it with counterparties that can actually use those capabilities, you're then going to move toward a place where you desire those transactions probably more than you would some of the other ones. So I don't want people to think that you have to have everybody there day one. There are probably partners or trading partners that corporates have today that are already fully enabled on these tools that bank with one of the larger financial institutions that have both send and receive available, where you can achieve economies of scale. And then over time, as more people join, you continue to appreciate those economies of scale.
Yeah, absolutely. I think it's going to be a journey, and we'll transition into the new type of payment rails. As an ex-banker myself, I was really excited when we launched this 8 years ago, but also a little bit impatient because we wanted to bring new services to consumers and businesses to really provide automation and make their lives better and really take advantage of the value from this new payment rail. So let's focus on that value, right? Because we are in a place now, we have a lot of banks that can send real-time payments. That's really at RUBYFIVE kind of what we're taking into play here to provide accounts payable automation. So let's look a little bit, Peter, can you help us understand some of the specific characteristics of real-time payments, why we should care, what makes them special, and will align us for additional benefits?
Yeah, so it's funny backstory on this one. When we launched the RTP network, Steve Ledford, who was one of the original founders of the RTP network, along with myself and Irfan Ahmad, all joked that we're really bad at naming things because all the value is not in the real-time nature of the system, but the value is in the attributes of the system. Although if you said, hey, Peter, what would you have called it? Well, transparency, certainty, finality, precision. I mean, like you can't name a product after that. But as we think about some of the attributes that I think are important to corporates, certainly transparency is one of them. Part of the challenge we have in today's payments ecosystem is that, especially with ACH, sometimes the transaction disappears. You don't know when it actually is going to completely settle. Therefore, you're holding your books open for returns to come back. Having certainty is obviously very important if you think about things like housing closings or fundings of settlements or bills of anchor where you're actually letting product go, right? You need to make sure that there's certainty that that transaction actually is there and the money is good. The convenience of 24/7, I think that's more important now than it probably was 8 years ago when the RTP system launched. We now live in a 24/7 economy. We expect everything to be on at any time. And we also deal, unfortunately, with the tariffs, maybe a little bit less so internationally than we were, but we are an international country now. So as we start to think about that, having 24/7, being able to operate around the clock, I think is also going to continue to be important as we move this thing forward. So, as we look at the key attributes, transparency being one, certainty, finality, and then I think lastly, I kind of glossed over this at a little bit at the beginning, but leveraging the ISO 20022 nature of the transaction, we have a lot more data available to us. And I think that's a very exciting thing being an end corporate, because now you have the ability to perfect payments versus in some of the other systems where you're looking or third or fourth party systems to be able to get all the data that's needed in order to reconcile a transaction. Last thing I would kind of highlight here, thinking about the piece of finality, or what we call irrevocability on the networks. That was such a key point, right? We always thought of RTP and even FedNow as really digital cash, which means that when the transaction is completed, it's done. You don't have to worry about the transaction being returned. And I think from a business perspective, that's way more important than it is from a consumer perspective, because now you can actually move forward. You know the money's there and it's fully reconciled. So having a 100% reconciled transaction at the time it completes, with all the automation back and forth between the two parties so that they know the transaction is completed, that's huge. And I think that's a game changer for the corporate space.
Yeah, absolutely. I think it's still early even in understanding how much value we can generate in the corporate space. With that, it's rethinking and bringing a new mindset to the table to think about, when you can wait till the last second to make a decision on your cash management, right? That opens up so many opportunities. So with that, I mean, we've got all these new characteristics around money movement that are special with the 24/7. The clearinghouse just raised their limit from $1 million to $10 million, which definitely is a sign that things are going well. There's confidence in the network. So let's dive a little deeper into the actual value, right? And we can kind of jointly jump in here. There's a lot of use cases, I think, that we could talk about. You mentioned the corporate use case, which is the focus. We've got a lot of CFOs, controllers on today. that really matters to them. So can you expand a little bit on where you see the opportunities for value based on some of those characteristics we talked about?
Yeah, so I mean, I think the big opportunity as we think about finality, which ultimately in my mind also equals liquidity. So if you think about real time or instant plus finality, that means instant liquidity, right? I don't know what CFO or treasurer doesn't want more money in their account so that they have things that they could do with that money, whether it's reinvest that money or whether it's be able to use that money to pay down another obligation that they have and get better terms on the next deal that they're doing. But I think those are two things that kind of come into place in terms of how you think about some of the use cases. Certainly, B2B automation is a huge one. When we launched this thing in 2017, um, we thought that some of the biggest use cases were going to be very long way off from the launch of the network. It's now 8 years down the road, and I think we're making really good progress toward some of those achievements, which is how do you actually automate the entire procure to pay process? People have been trying to do this for what, 30 years now. I think we both kind of been in the software industry thinking about how this can actually transform. We now have a network available that actually allows us to do a lot of that automation, which makes it a lot easier because it's not a lot of bilateral relationships that have to happen between parties. I think certainly the sort of purchase and fulfillment side of things. We talked a lot very early on about, hey, I've got to drop off a whole bunch of steel. I need to make sure that that steel is paid for before the truck leaves, and it's accepted. And then how do you remediate in between there too? So things like using the request for payment to do invoicing on top of the network, I think, are also extremely important because it allows for a degree of precision and perfection that we weren't able to achieve on payment networks before because you can talk back and forth to the counterparties that you're working with. Some of the other things, we had envisioned, certainly the, what do we call the B to small b type scenario where you've got larger businesses dropping off merchandise at smaller businesses, and they need to be able to be paid on terms before they allow for the release of those things. And then certainly investments from a corporate treasury perspective, now being able to, as you mentioned, with the clearinghouse having their $10 million line open for a $10 million transaction, be able to concentrate cash faster into your accounts at the end of the night so that you can further invest those things. A lot of times we did wire drawdowns, and those wire drawdowns had to happen by a certain time in the night for us to be able to actually reinvest those funds. Now we can actually envision automation throughout the day for any time of the day, which means that if you're an East Coast company that needs to reconcile cash from the West Coast, you can do that later on in the night and not have to worry about the clock. So I think those are a few use cases that I would highlight that are, I think, huge opportunities within the space.
Yeah, and I think we're really just at the tip of the iceberg here, kind of figuring out what those use cases are. It's been fascinating from my perspective on this journey with RUBYFIVE and in this space, talking to businesses. I'm surprised at the other use cases that pop up continually, right? There's mortgage transactions or businesses paying businesses, or anywhere you can replace a wire and have that extra, like you said, the 24/7 time frame is great. There's some really cool things about like clinical trial drugs where payments have to meet quickly because it's a lot of money and folks can't be, a pharmacy can't be out those funds for so long. So there's just so many really interesting use cases. And I think it's great that we're at a place where we have maturity here where we can actually start to bring it to life and execute some of those use cases.
Yeah,
So
a couple
really
couple things
cool.
to add on there for the business side of it too. If you're thinking about, and we see this a lot today with insurance companies, insurance payouts, moving them from, ACH or check, which is kind of what happens today, to a, instant payment to the end customer, I think is a big use case. And then I think additionally, as you're looking at the better use of cash, being able to set some pay when paid. So any of the industries that are pay when paid, being able to collect those things faster means that you're getting the other side of that transaction out the door faster.
Yeah, absolutely. Construction, right? The general
Hmm.
contractor gets paid, they've got to immediately pay the sub. So there's just really varied but interesting use cases in a lot of different verticals. The other thing I might add on value as well, I think in the transaction you touched on it, is you can communicate through this payment mechanism. So it makes it much friendlier for the supplier or vendor being paid, right? They get that rich remittance data about they can understand what that payment was for, right? Instead of a short memo line on a check or sometimes limited data in an ACH payment. And having that information helps the person on the other end, the payee, helps them reconcile their accounts receivable, right? So they can benefit from that time savings as well.
And I want to underscore a point that I made earlier around finality and liquidity, but really the concept of that instantly reconciled transaction, the move from a day 3 reconciliation to a day 0 reconciliation. I worked in corporate treasury at Capital One for a little bit of time, and I can't tell you how much waste I saw that create. Just having to wait multiple days for a transaction to make sure it was fully reconciled, for you able to close books. Imagine moving to a day 0 close on end of month, end of quarter, end of year. To me, that's the Shangri-La of moving to instant payments.
Absolutely. It's a whole new wave of innovation and rethinking workflows and um, financial operations. So it's really exciting. So one thing we haven't really dove into too much is risk, right? Around how does this new payment rail help us from a risk perspective, right? I know there's maybe some fear generated from the speed and finality, but I think what a lot of folks might not see is that there's tremendous risk mitigation here as well from a fraud perspective. So what are your thoughts on that?
Yeah, a couple of things. So a lot of people here out in the industry, and I've seen this at AFP conferences. So I'm going to say it, and then I'm going to look in disdain. The whole faster payments, faster fraud thing. It absolutely drives me up a wall, because if you look at it, the fraud rates on RTP and even Zelle, actually, quite honestly, are so much lower than what they are in other networks. I mean, Zelle, for example, everybody puts Zelle out as a faster payments like capability. And it's still less than 0.1% of all transactions that actually come up as fraud. On the RTP network and FedNow, their fraud rates are really, really low, less than half a basis point of fraud losses. And the reality is, it's the people who don't have the right controls in place that have the issues. And corporates know this all the time. If you have the wrong controls in place, money moves out the door. There's no difference when you talk about things like RTP. I think if I'm a corporate treasurer, I actually would prefer a request for payment coming in rather than an email going to anybody within my group to ask for payment, right? Because now I have a validated counterparty coming in from another financial institution that I can now do some perfection on before I send the transaction out the door. And when I do send the transaction out the door, it's completely linked to the request for payment that it was sent in for the payment anyway. So between that and moving a lot of things from a debit pull to a credit push space, you're actually reducing a lot of risk within the network. And we can start to utilize tools like virtual accounts and other things where we can give our customers like a UPIC or a token or a credential. They can pay us on that. And the only thing they can do is send us money. Same with us being able to give our counterparties um, a credential like that. And I think all of those things allow us to make better choices as organizations, and put better controls in place. And I think you're going to continue to see very, very low rates of fraud on the network, because there's a lot better tools and capabilities built into place within both financial institutions. And I think even as corporates start to integrate these tools against their back office systems as well.
Yeah, that's great. And I think the time savings with the automation right? That time savings better used to be focused on the controls and the controls up front, right? Make sure an invoice is legit. Make sure you're paying the person that you think you're paying, and put those controls in up front, which is really where the focus should be, because that's where, like you said, it's not the payment itself, it's the controls that happen ahead of time. I also think it's,
I was going
go
to
ahead.
say, and if we're looking at business process automation as really an end goal for being more effective as companies, being able to have computers talk to computers way safer than humans being involved in the process.
Absolutely. Yeah, great point. And then there's the basic, elimination of checks, and check fraud is higher than it's ever been with check washing going on. I was at my bank the other day and they wouldn't even give me checks because they were. So I was like, that's a great thing, right? I think we're there where we're finally going to be fully electronic.
Protect you
Really,
from yourself.
yes, exactly. Well, I love to, as we get towards the end of the webinar here, I definitely want to talk about a little bit about innovation. We're at the very beginning, I think, of what we're going to see of the evolution with what real-time payments will bring. But when you look further out into the future, like what could this utopia look like for us in the United States? And I think you touched on some cool aspects of it, but any thoughts? Like where would you like to see us go in that very futuristic view?
Yeah, so kind of break it down for folks. When we were first developing the RTP system and envisioning what we could do for the United States, whether it was in the Faster Payments Task Force led by the Federal Reserve or in the back offices of the clearinghouses, we're going through and working through it. We really, as I mentioned, did not look at this as just a new payment system. We look at this as a payment system for the 21st century, which meant that you needed to be able to make it programmable. So now that we actually have a programmable payment system, which means that we can actually integrate it into our back office tools, we can look to a higher degree of automation. We have the ability to take, I think, a lot of waste that's been existing for a very, very long time within the corporate space because of the way our payment systems worked. So for me, a lot of the future innovation, especially in corporate payments, is going to be focused in on how do we actually perfect it the first time, to make sure that there aren't errors within the payment at all. How do we utilize things like request for payment to be able to drive a greater degree of automation? And even so, how do we even change the invoicing process? So today's process, we send out a batch invoice. Why do we send out batch invoices? Because we're paid in batches, right? So if we think about that and we think about unbundling the batch, and now we can do single item invoices and they don't cost us anything more. In fact, they cost us less than doing multiple item invoices, because now if there's a question, you're only calling one thing out that's out of a separate invoice. I think we're going to start to see a lot of those innovations drive more volume across the payments rails, but actually then reduce risk and exceptions across the industry. And I think being able to leverage a lot of the tools that are within, or a lot of the messages within the RTP and FedNow networks, ultimately are just going to enable new opportunities that we probably haven't even thought of, especially as we look at future global cross-border leveraging ISO 20022 across payment rails.
Yeah, and that's a great point to end on. That the same infrastructure and messaging set that enables real-time payments for us in the U.S. is the underlying foundation that is in place for cross-border payments. So, yeah, it's really, really exciting. We are already at the end of our time, and Peter, I can't thank you enough for joining us today. Especially, I know you're coming on the tail end of not feeling well. So thank you so much for joining us. We did not have an open Q&A session today for everybody, but if you do have questions, I'm going to go ahead and share both mine and Peter's contact information. You can reach out for any follow-ups, for any questions. And I also want to highlight that we do have 2 more webinar episodes in this series. The next one's going to be a direct conversation with the CFO who has a great perspective on bringing this to life within his organization and how it can be used. And then our third session is behind the books. I'm going deeper with the controller into like what reconciliation and closing cycles look like when you're using real-time payments. So Peter, thank you again. I'm going to go ahead and share Peter's information as well really quickly. Let me share this so that you can all contact us as needed, and we're happy to dive deeper into this subject. We are both payment nerds, and it's one of our favorite topics. So feel free to reach out. And thank you all for your time today. Thanks, Peter.
Thanks, Lori.